Moving on to our CoinDesk Director of Data and Indexes, Galen Moore in Boston. Welcome to the show, Galen. So I had shown that chart before about VCs. Now, institutions may not be as enthusiastic about Bitcoin as they were earlier this year, but VCs are putting their money into blockchain startups. So what does this say about where we are in this current cycle?
Yeah, two things, Christine. One, VC dollars in general are just surging right now, dominated by larger so-called non-traditional venture, like hedge funds, for example. And two, I think institutional interest is picking up, but the challenge is both regulatory and fiduciary with direct investment into Bitcoin or other cryptos are noted. Venture represents a much more straightforward path into exposure for some of this institutional capital.
Okay. And so what does this mean for Bitcoin? And I'd like to hear your outlook on Bitcoin, seeing as how we did see a bit of a rally, in these past few weeks with the short squeeze. Now we're still back in that 30 to 40,000 trading range. It looked like we were going to break out over the weekend with that 42,000 resistance. But what are you seeing now?
Well, I can tell you that if you are trying to raise capital for a Bitcoin-related actively managed fund or technology project, now is a good time. Even anecdotally from conversations here in Boston, I've noted that. And the numbers certainly do bear it out. But for Bitcoin in general and the Bitcoin price, I think, look, Chairman Gensler's skepticism of the crypto spot markets and their reliability against manipulation is likely to further dampen the sort of enthusiasm that of institutional investors for participating directly in the spot markets in a way that would push up the Bitcoin price. So that's sort of the headwind, I feel like, in this environment.
So are these regulatory talks potential headwinds for Bitcoin going forward?
Well, it's not just the regulatory sort of move. I don't think Chairman Gensler's comments, recent comments, were a particular surprise. As your previous guest, Sean, noted, they did seem to open the door, at least a crack, for certain kinds of approaches to a Bitcoin ETF. But I do think, look, the challenge here that everybody knows is that crypto markets may be manipulated. And I think that's a challenge that at CoinDesk Indexes we're very focused on, which is why we select markets in the way that we do as constituents for our price indexes.
Speaking of market manipulation, Gensler also said on CNBC this morning that many crypto trading platforms are not on regulatory regimes that protect investors like the New York Stock Exchange does, and so are open to manipulation. So we do see a global regulatory crackdown on exchanges like Binance. So should we be concerned of these trading platforms?
I think there's certainly any number of reasons to be concerned about certain trading platforms compared to others. I don't want to get into specific names, but we do vet trading platforms very carefully by a list of criteria, including liquidity, compliant U.S. dollar markets, AML KYC, and only markets that have those qualities can contribute to our price indexes, which form the building blocks of multi-asset products like the CoinDesk DeFi Index, the DFX.
All right.